Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we would be discussing what to expect in Nifty and Bank Nifty from here on, along with key levels for both the indices. We'll also be discussing on key sectors and stocks that we should be focusing for the day and the next few trading sessions. A week ago, Nifty found support at its 200-day EMA, that is around 18,800 18,850 zone, and witnessed a decent short covering move up to the levels of 19,200 on the back of positive global cues. Bank Nifty has managed to close at 43,300, slightly above its 200-day EMA zone in the last trading session of the week. The performance by the broader market was commendable as they outperformed the frontline indices, with Nifty Midcap advancing 2.25% while Nifty Small Cap jumped 2.5% for the week. Both the dollar index and the US 10-year yields have experienced a sharp down move in the last few sessions. In fact, the dollar index suffered a breakdown closer to 105 levels, which is positive for relatively riskier assets like emerging market equities. Coming to index levels from a weekly perspective, index in this rebound has managed to cross and close above 19,150, which is 23.6% Fibonacci retracement of the entire down move, that is from 20,222 all the way to 18,837, and the next important level is 19,360, where the 38.1 retracement lies. This zone is also the 20 EMA level and hence assumes extreme importance. Above the levels of 19,360, indices could witness further strength up to the levels of 19,530 in the pullback. Support zone is likely to be witnessed around 19,130 19,150 levels. Below 19,150, index can witness a sell-off up to 19,000 levels, followed by 18,800 levels. For the day, post gap up opening, 19,360 zone would be an important level to watch out for, above which 19,420 19,450 levels can be expected as a result of short covering. On the downside, 19,230 19,250 zone would be the crucial support zone. Looking at the OI data from a weekly series, significant put OI has been built up at 19,300 and 19,200 strikes, while on the call front 19,300 19,350 19,400 strikes witness considerable open interest additions. Overall, the range for the day could be 19,130 on the downside and 19,430 on the upside. Coming to Bank Nifty, the index ended the last three trading sessions forming consecutive dojis. This implies that much of the progress made by Bank Nifty has been made in gaps. If we consider the entire downfall from 46,300 to 42,105, from a reversal perspective, that is, crucial level would be 23.6% Fibonacci retracement, which is currently placed at 43,102, above which the index has closed on Friday. Till this index holds this support level of 43,000, in the next level on the upside could be 43,780 43,800, which is the 38.1 retracement level, followed by the level of 44,200, which is the 50% retracement of the above swing levels. Below 43,000, index can retest the levels of 42,700 42,600 on the downside. A key to watch out would be the momentum in ICICI Bank and HDFC, which is just placed below its 20 EMA level, while Reliance has just about moved above its 20 EMA level. Let's see how sectors and stocks that are looking positive, keeping the short-term perspective in mind. A few sectors which are sustaining above their 20 EMA and should be on our radar are Nifty Realty, CPSE, Media, Oil and Gas, and select stocks from these sectors are Godrej Property, Prestige, Oberoi Realty, Sun TV, Zeal, REC, PFC, Coal India and ONGC have formed favorable chart structures with supportive data on the derivative front. PSU banks, autos, FMCGs are trying to show incremental momentum post a brief consolidation, and stocks such as Bank of Baroda, Punjab National Bank, Godrej CP are looking strong on the charts. IT Pharma Index, which are generally defensive, are witnessing some pressure with risk on environment returning, and these sectors now well placed below their 20 EMA, below the consolidation zone. Few stocks where the daily, weekly, monthly charts are looking strong are Nam India, Radico, Trent, L&T Finance, HAL, Muthoot Finance, Shriram Finance, MCX, CDSL look well placed on the charts. If we observe the FI data, not much action on cash front with the FI selling 12 crores while DIs bought to the tune of 402 crores in the cash market. Only positive is that the intensity of the FI selling in the cash market has reduced. FI long short ratio for index futures remains weak at 16% despite adding 13,000 index future longs on a net basis. In the stock futures side, FIs have bought to the tune of 33,000 contracts, while on the options front, FIs have squared off almost 40,000 contracts and also sold 50,000 contracts on put, indicating a contraction in volatility. Just to summarize, key support level for Nifty being 19,130, 19,150 level, and resistance seen at 19,360, followed by 19,450 and 19,530. While for Bank Nifty, key support would be 43,000, 43,200 zone, and resistance would be 44,100. Above the levels of 44,150, 44,200, Bank Nifty can witness further buying movement all the way towards 44,500 on the upside. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.